What's up guys? So no memes for this video. I have a busy schedule, so let's just dive right in. So Bitcoin is doing exactly what I said was going to happen in my last Bitcoin videos. In those videos, I talked about some bearish signals that would bring the broad market down and how this could also end up spilling into the price of Bitcoin. Don't panic. This will be a buying opportunity if you know how to buy bottoms using a systematic approach. In this video, I'm going to share with you guys my mechanical trading strategy that helps me generate consistent profits swing trading the markets. So at the moment, Bitcoin is almost back to its all-time highs, right? So we called the bottom here. We said that there was a high probability of a nice reversal to the means. That's exactly what happened. We actually pushed past it and we are now getting rejected at the first standard deviation. There is also some big news that just came out of a new player, which is the US government basically coming out to dump $2 billion worth of Bitcoin. At this point, it's starting to look like a coordinated attack from government. I think governments are starting to wake up a little bit. At the beginning, they all thought that Bitcoin would die, but it never did. And that's the problem I think that they're having. I think they're slowly starting to realize what Bitcoin actually is. And because of that, right, we had Germany dumping $3 billion worth of Bitcoin, if I'm not mistaken, a couple of weeks ago. That's why we had the big correction in the price of Bitcoin recently. And now we have the US government, basically a second attempt after a failed attempt from Germany. So going back into the technicals, it is no longer a good time to buy right now, in my humble opinion, on the short term. The reason why is we are now in the upper ranges of the probabilities. We could still go higher to the second standard deviation, which is about 5% higher from where we are. But that's not really worth it when we are most likely going to have a nice pullback from the sell-off of the US government, which would bring us most likely back to the reversal of the means, which is about 5% lower. So if you're buying right now on the short term, the risk ratio is 1-to-1, so it's not really worth it. I'm hoping that we actually get a deeper pullback from the sell-off of the US government. That would be a really, really nice buying opportunity. I think that a lot of people are going to freak out again, and that might be one of the last dip we get before the parabolic rally. All of this will also depend on the direction of the broad market. So later in this video, I'm going to tell you guys my game plan for buying the dip if the correction in the broad market continues. This is why I love having my mechanical approach of trading. It makes it easy to react to different outcomes using a set of rules that I just follow without having to guess or use my intuition. So sticking with the technicals, there's also some more good news actually, guys. If you recall, in my last videos, I talked about some critical levels Bitcoin had to reclaim. One of them is the Pi moving average right here, and it actually did. It also reclaimed the 60,000 psychological level of Bitcoin, which is a very important level because it's the most bought level from ETF holders in the US. So every time we dip below 60K, millions of people are underwater on their Bitcoin positions. Also, just looking at the Bitcoin Cycle Master, if you guys recall, also I showed this in my last video. We had a beautiful bounce here. This is one of the reasons also I called the bottom. It was a very key support, and right now we're kind of in no man's land. The next target will be close to $100,000, so it's 96K, and then the second one, which also matches my long-term target for this cycle, is about 140,000 and 150,000 per Bitcoin. And now I'm going to show you guys why I'm not too worried about a correction. So looking at my two favorite momentum indicators to see what's going on in the internals of Bitcoin, you can see that looking at the MVRV momentum of the 100 moving average, that we're basically at the means right here of the yellow line. Historically speaking, when we're in a bull market, right, and we get overextended by these big amounts, that's when you need to worry about a pullback. When we get overextended to the upside, and when we get overextended to the downside, it's always a long-term buying opportunity when we go below that moving average when we're in a bull market. And at the moment, we're basically just at the means, chilling, doing nothing. So this is basically telling me that we have a lot of energy to go to the upside before we have a serious correction again in the markets. And my other momentum indicator that I like looking at to see extremes in behavior and positioning is going to be the profit loss margin. And as you guys can see, we're really low right here, guys. The time to start panicking and taking profit is when we hit these higher level right here, and we're not near there. We weren't actually negative. This is one of the reasons I also call the bottom. Usually when we're in a bull market, we tend to go to this level, right? And then it ends up being a buying opportunity. When we're a bear market, we end up most likely breaking those levels right here and going way lower to that green line. So that's how you can differentiate a bull market and a bear market to buy dips, right? So you want to buy dips obviously in a bull market, and in a bear market you just want to go on vacation. So that's one of the reasons I was also calling the bottom. So both of these indicators basically are indicating more potential upside in the near future. Despite the aggressive V-shaped recovery the actual price of Bitcoin had, these two momentum indicators didn't go to extremes on the long side, which also basically, like I said, means that we should have way more room to the upside. This is why any dip is going to be a dip buying opportunity. And then real quick, I just wanted to talk about sentiment in the market right now. Obviously, the fear and greed bounced back. I don't really use it anymore. I'm not really sure how accurate it actually is, to be quite honest. But there is one cool internal indicators that I like looking at Bitcoin. It's basically just the percentage of addresses that are in a loss. And this is the best way, in my humble opinion, to really see how people feel, right? Because at the end of the day, you will feel the same way than your portfolio. So if your portfolio is down 20% in 2 weeks, you're most likely not going to feel good. You're probably going to feel like shit. And if you're up a lot, right, most likely you're going to be very euphoric. And I just wanted to show you guys the difference between secular bear markets and when we're in an uptrend during bull markets and we have corrections, right? So what the one we just had right here, right, this is a buying opportunity. When we are in the part of the Bitcoin cycle, when we know we're in a bull market for another year and you see the percent address and loss spike to this range, that also tends to end up being bottoms and amazing buying opportunities. As you guys can see, during the 2016 2017 bull market, you know, all of these were dip buying. So it's very normal for Bitcoin to have these big corrections while going higher. And then guys, the last indicator that's super important to look at on the technical side, even if you're not a technical trader, it doesn't matter. If you look at history, the momentum on the weekly time frame is key. It is so important to respect. Do not piss against this one. Even if you're not into technicals, it's really important. You can look at it yourself. Every time we cross to the upside or downside, the price action of Bitcoin respects the weekly momentum. And right now, guys, we're still negative, right? So hopefully, right, this is also what I'm waiting for a bullish cross here. Once we cross there, that's really going to be, in my humble opinion, the beginning of that next big leg up. The most important piece of the puzzle is zooming out and looking at the bigger picture of the crypto cycle. My favorite ratio to look at is the Bitcoin price divided by the M2 money supply. So as you guys can see, we keep getting rejected by this orange yellow line right here is super important. We keep getting rejected. At one point we're gonna break it, and when we break it, that's when we're gonna enter that parabolic rally. And then I have, you know, obviously my bigger picture targets, which is about 140,000 per Bitcoin. So when should we buy the bottom? That's when it becomes important to look at the broad market like the S&P 500. In my last video, talked about multiple bearish signals forming. Looking at probabilities, we are now at buyable short-term bottom right here. We could technically go a little bit lower, which will be the level where I will continue adding to my positions right now. I got back in the market slowly. I still think we could technically go a little bit lower, right? But it's going to end up being a beautiful buying opportunity as well. And basically my short-term trading strategy has triggered a buy signal on most indexes a couple of days ago. So I was kind of buying here actually. Now we bounced a little bit higher, but we could, have one last pull to maybe, finish a Elliott wave pattern. That would be quite nice, right? And then that will most likely be a nice local bottom. All right, that's pretty much it, guys. So sorry if it was long. There was no memes. It was pretty dry. I just have a busy schedule, and just wanted to help you guys kind of see what the hell was going on in the market. So hopefully this helps. So take care and stay blessed.